Friends, we all know that passive funds have been gaining market share in the MF industry. In fact, these funds now comprise 14% of the total MF AUM. However, many MFDs are yet to integrate passives in their business. To help you understand more about passives, today we have invited Nimish Ashar of Nimish Ashar Wealth. Nimish has over 2 decades of experience in the wealth management industry. So let us learn from the wisdom of Nimish. Welcome, Nimish, to the show.
Yeah, thank you, Nishant, and good evening.
Okay, so Nimish, so this is very interesting to know that majority of your assets are in passive funds. So what got you interested in passives and why are you so optimistic about it?
Yeah, Nishant. So basically, if you see, as the technology advancement goes on, the information flow, which was there earlier and which is there right now, is much more faster. So anything which is discounted in the stock price, the speed has increased much more than what was there some years back. So which allows, the thing is, it allows the discounting happening in the market too fast, and this gives the room to the fund lower room to the fund manager to actually create or generate alpha. So day by day, the alpha generation, especially you can say in the large caps also, it is very less. So that is the main reason where, why people prefer, I prefer passive funds.
And but Nimish, few categories of active funds are still outperforming the benchmark, right? So what do you think that which are the categories that MFD should look at? I mean, replacing active with passive or something like that.
So it is like that. Winners keeps on changing every time. So there will be always certain funds which will outperform, but which fund will outperform, nobody knows. So it is basically again a random kind of situation where winners keeps on changing in a different time zone.
Okay. So Nimish, we would like to understand the investor psyche as well. So which categories of investors demands passive? I mean, retail or HNI, and why there is demand of passive among HNIs? I mean, HNIs are anyways, yeah.
Yeah. So what my experience is on the retail side, the pure retail side, the awareness of passive is almost nil or very minimal. So I have not come across anybody who will tell that you suggest me a passive fund or something like that. But definitely on the retail, on the HNI and the ultra HNI, they are aware. The main one of the reason is the low cost fund. That is the main reason where people focus on the HNI and the ultra HNI space.
Okay. So when did you think the movement start? I mean, when did HNIs people starting to move from active to passive?
So index funds were available long back, 25 years back also, but the traction has probably seen more in last 3 years in the COVID situation. So this is what I believe, I have seen that.
Okay. So Nimish,
in last 3 years, the passives have picked up much more than what was there earlier.
Right. So Nimish, passive funds by nature aim to mimic the underlying benchmark, but still very few funds are able to do it properly. In such a scenario, how do you shortlist passive funds for your clients?
Yeah, Nishan. So basically, what passive fund does is just mirror the kind of stocks and the weightages. So your tracking error plays a very vital role in that. The lower the tracking error in the passive funds, the better the fund is. Okay. So I choose whatever the lowest tracking error funds to the clients.
Okay. Is it same for index and ETFs, or there are some more things for the index or ETFs? What is that?
So tracking error is there in both, like index and ETF both. The more parameter you can say in ETF could be the volumes. Volumes could be another parameter which you can see in the ETF. ETF and index funds are the same. It is the different two ways to go about. The destination is the same. So in ETF volume, if there is a volume, that plays a good parameter to judge the ETF.
Okay. And Nimish, for our audience, I mean, what is tracking error? I mean, can you define tracking error and how to?
Yeah. So tracking error is basically the exactly mimicking the difference between the index, the total return index, and your fund performance. That is basically the tracking error.
Okay. But how do you get details or collect data to shortlist funds for clients?
Yeah, so I have a software where it shows all the data, like a tracking error, the volumes, your AUMs, and everything. So from that, I use the software to to select the funds.
Okay. A minute ago, you were talking about average trading volume in ETF, right? So what does it mean and how it matters to MFDs?
So if you're buying an ETF, first thing you need a demat account. Okay. So the volumes are very important component in case of ETF, because if there are low volumes, then the cost would be higher, because there would be something called impact cost, which will actually be very high if the volumes are less. So volumes in case of ETFs is very, very important.
Okay. So can you explain, I mean, what is average trading volume in ETF?
So average trading volume is basically, ETF is basically exchange traded funds. So like the normal stock, how it is traded on the exchanges of NSE and BSE. Similarly, they are also traded like, Nifty Junior and other sort of funds. And basically it is like number of trades which is happening on buying and selling. That is the volume.
Okay.
So more the volume, it is better for an investor.
Okay. So 100 crore.
Because you reduce the impact cost.
Okay, so let's for instance 100 crore trading volume is better than the 50 crore trading volume fund.
Yes.
But how do we get details of average trading volume, Nimish?
You can get the average trading volumes on the exchange sites, nseindia.com or bseindia.com. It's available there on the average trading volumes and the historic data.
Okay. So Nimish, one last question. Most MFDs stay away from passive funds because they feel they are not economically viable for them. So what is your view?
Right. Very true, Nishan. So the earnings, the revenue which the MFD earns from promoting the passive funds is very wafer thin. But one thing is for me is like the client interest is the most important component for me. So if I actually give client a proper proper suggestion, what I have actually experience is he will give me some serious money. He will give you more money in volume and also give reference. So it is a win-win situation actually for both. And even though the revenues are less, but it's a volume game.
Okay. Okay, so with that, we have come to an end to this interesting session. Thank you so much, Nimish, for your valuable time and insights.
Thank you, Nishan. Thank you.
And finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.